Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Bill, let me give you a hypothetical situation. So say I want to buy a rental property in your area, and I want to meet the 1% rule, meaning I want to buy a property that I'm going to pay $100,000 for, and I want it to rent for $1,000 a month, and I want to find a nice house in a good area. Is that something that I would be easily able to find, maybe looking on Zillow or working with a local agent?
As an investor, that's going to be very difficult to find. You're going to be in direct competition with retail buyers. So it's going to be very difficult to hit the 1% rule as an investor in this market.
Now, I know that you own a lot of rentals that cash flow really well. I know you've got good quality properties. Did you buy your properties a long time ago when properties were cheaper, or are you still buying rentals today?
We've consistently bought over the last several years the same amount of properties every year. We haven't changed our standards at all.
And are you looking for properties that meet the 1% rule, or have you had to compromise on the returns that you're looking for?
We're pretty much not compromising. We're continuing to look at everything that would be a 2% property, maybe a little bit of moving here and there, but our criteria is pretty fixed at the 2% rule.
All right, let me make sure I get this right. So a lot of investors in your market are having trouble finding deals that meet the 1% rule, but you're doing twice as good as that. You're looking for deals that meet the 2% rule.
That's correct. Yeah, everything we look through that lens, and we use that as our criteria.
On the podcast today, Bill is going to share with us exactly how he's getting such incredible deals on his rental properties. We'll also talk to him about one of his recent deals. This was a small apartment building that he bought. The numbers made sense when he bought it, but he was able to fix the property up and increase the rent quite a bit. So we'll take a look at that deal. We'll look at all of his numbers and figure out exactly what he did. Joining us on the show today from Martinsburg, West Virginia, is Bill Kenney. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Bill. A good deal on a rental property isn't going to last very long. To win properties today, you need to move quickly when a deal comes on the market, but it takes time to analyze a property. I want to let you know about an app where you can analyze deals on your phone in seconds. It's called Ask Rick. That's RIC for Rental Income Calculator. You can analyze a deal with the push of a button. You can figure out the rent, your mortgage payment, your expenses, and figure out the cash flow. If the numbers make sense, you can make an offer right there on the app, or you can send a calendar invite to your agent to see the property in person. Ask Rick is currently offering a free 7-day trial. Just search for Ask Rick in the App Store or go to Just Ask Rick. That's RIC, justaskrick.com. There is a ton of paperwork involved when you're getting a mortgage on a rental property. Lenders are going to want to see 2 years of tax returns, pay stubs, bank statements. I mean, it's a lot of work and a huge hassle. Shaylee Ridge from Ridge Lending Group has a brand new loan program where she doesn't care about any of that. She actually doesn't need any paperwork from you at all. She's just going to look at the deal. The most important thing she wants to see is, does it make sense? Is the property going to cash flow? If it does, she'll give you a 30-year fixed rate mortgage. Now, the rates are going to be a little bit higher than a traditional full doc loan, but it's still a great deal, somewhere between 3.9 and 5%. She can close quickly and there's no hassle. She can even do a cash out refi with this program. If you want to learn more, just reach out to Shaylee at ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056.
Rental Income Podcast.
Bill, let's start off talking about your portfolio. Can you tell me about your rentals?
We have, between my partner and I, we probably have about 50 units in the local area.
And so you mentioned that you are looking for properties that meet the 2% rule. And I think that's incredible that you're getting such good returns in such a tight market. So a lot of times when you are looking at properties that have returns that great, you're compromising somewhere. Maybe you're finding properties in rougher neighborhoods, or you're dealing with maybe not the best tenant. Is there a downside to what you're doing, or are your properties pretty good?
No, I would say that statement is pretty true. If you want higher returns, then you're gonna have to pay for it somewhere else. But you can mitigate that with good processes, good people, and good management.
Okay, so are your properties rougher properties, or are they in like tough neighborhoods?
I would say they're in low B, C class neighborhoods.
Okay.
But something that I've always lived my investing career under is that there's good people in all markets. So you just have to have a good process for finding good tenants. And obviously we've had our share of tough ones, but we have a lot of really good tenants. So it comes down to just managing it like a business, having good people in your business and having good processes and selecting the right people. Right now it's real easy. Rents are up, and the demand for rentals is extremely high. There's very low vacancy, so you can have your pick of the people. But there's also challenges on the other side of that. The inventory's down, and there's harder to find things, and the price to rehab has gone up. Mm-hmm. But no, it's definitely a business, and it can be very difficult at times, but it can be very rewarding as well.
Sure. Now, you mentioned that a lot of investors are having trouble finding deals today, but it seems like you're coming across deals. So how are you doing? Like, what are you doing? Like, how are you finding deals when other people are having such trouble today?
So we've consistently had a marketing campaign into the areas where we buy for several years now. I think we have a pretty solid presence. As you know, we have a local meetup group. We consistently do mail. We consistently lead generate, and we get calls from that. We get referrals. We've built up a network, and we've put enough mail out there, and we have some internet lead generation strategies that we get enough calls that we can still buy from.
Okay.
So it's stayed very consistent for us.
So it sounds like you're being really proactive, that you're creating deals. You're not just waiting for a deal to show up on the MLS.
Well, you wouldn't buy anything if that were the case.
Right.
We wouldn't buy anything.
Yeah. All right. So
no, you have to take action.
Yeah.
The only way to do this is to take action, and you can't take any action. You have to learn and take the right actions, and you learn that over time.
All right. So tell me about the mail. So you're sending out, is it postcards that you're sending out to potential sellers?
Yeah.
Okay.
So we're typically looking for maybe non-owner occupied properties, or people that may be motivated sellers in some way. And so we're consistently mailing to them and just saying, hey, this is what we do. We're local guys. We're going to be in the area. This is our business. If you have a problem, we'd love to solve it for you. And, we can buy your house, and we can make it real easy for you.
So you've got a targeted list of potential people that might be looking to sell a property. Is that kind of how it works?
Yeah. That's how it is. Like, okay. You're looking for, a lot of people may mail to probates. So that would be somebody that has pretty much inherited a house, and they've got to sell it off in order to pay off any debts, and so that's going to be potentially a motivated seller, or someone that may be they live in California. Like, for instance, we've bought properties from people on the West Coast. We've never met them, so maybe they've inherited the property from their parents or something, or maybe it was an investment property, part of a portfolio, or maybe it was investment property that was inherited. and they just don't want to manage the property anymore. So there's all kinds of different situations out there where people are looking for solutions. And, maybe they don't want to fix it up and go on the market, or maybe they don't want to deal with a realtor and showings and paying commissions. They just want a simple, quick fix. They don't want to, get rid of the stuff in the house. They don't want to fix it up. They want to sell it in a week, so that's where we come in.
And where are you pulling this information from to find these potential sellers?
Typically there's a couple different companies out there where you can pull lists, and you can ask for whatever data you want from those lists. We've had some success by going directly to the courthouse. There's, Freedom of Information Act allows you to get information. Maybe it's water shutoffs or evictions or, the probate list. So those kind of situations may indicate some kind of motivation. And that's the kind of people that we're trying to and get in touch with and see if we can help them out.
When you send out a postcard to them, are you just sending out one postcard, or do you have like a campaign of several postcards that are going out?
It really only works if you do a campaign, if you consistently stay in touch with them, because you may hit them with a postcard or something, and they're not motivated until 6 months later. So maybe you've hit them with 3 mailings at that point, and at that point their motivation changes.
I see.
If you only mail them one time, you're hoping and praying that that card reaches them at their highest point of motivation.
Right.
So the consistency in everything in this world works, right?
Yeah.
If we only go to the gym one day, right, what can we expect to get out of that?
Right.
But if you consistently mail over time, then those people are going to recognize you and say, these people are serious. Like that, this is their business. This is what they do. And they give us a call, and we tell them what we can do for them, or we'll go out and meet them and see if we can help them. Like we don't want to say, yeah, here's what it is. No, we want to listen to them and hear what their problem is, because there's a couple different ways you can solve that problem. So it depends on what their issue is and how we can approach it to make it a win-win for both parties.
All right. So you found an off-market property. When you actually find the property, what kind of condition are they typically in?
They're in every kind of condition. We've met people that have just bought the house a year ago. It's brand new, and they've encountered a divorce or something like that, or some kind of problem. We look at properties where they're 100 years old and they need, $75,000 worth of work. It's got the original kitchen, the original bathroom in it. So it's really not the property. It's really the the person, that person's going to have a unique problem. And so can we make it work? Do they have a lot of debt on it? Can we fix it up based on what the ARV is, based on what debt they have on it and what they want to get out of it? Possibly. Yeah, we can use some unique strategies to help them out. Maybe just paying all cash and closing quick doesn't work, but we might have to talk it over and see how we can help them, with that unique situation.
So bottom line, deals are out there. There's sellers out there that want to sell, and they're able to sell it at a price where it makes sense to you, but it's just a matter of putting in the work to find that deal. And maybe that's something that a lot of investors don't want to do.
Yeah, that what you said is true. There are deals out there. Everybody encounters problems in their life, and their biggest asset is their home. And so if they can leverage their largest asset to solve a massive problem they have, then people will do that. Mm-hmm. And that's just the way it is.
Yeah.
But a lot of investors are looking for people like us that are talking directly, because it's a lot of work.
Right.
You do have to spend money through all this marketing, and we have to have people that I have to talk to them, or my acquisitions guy has to talk to them, or our leads coordinator has to talk to them. So we have people in our business that do that are talking to sellers every day. a lot of people don't want to do that. They don't want to consistently mail every day. They don't want to have a platform where they, house these leads and they follow up with them, so there's costs associated with it. So a lot of people may just, latch onto a wholesaler or get a realtor that's investor friendly or something like that and kind of bypass that. But then you're not going directly at it. You're at the mercy of somebody else at that point. And we wanted to have consistency in our business and be able to flip and wholesale and foremost buy rental property. Without going directly to them, we couldn't do that.
Right. Now, I love what you're doing. I mean, it's such a great strategy that you're putting in the work. You're finding these deals. I want to take a look at one of your deals because I think that that you're really onto something here. So, like, maybe we could talk about one of your properties. Do you have one in mind that you think might be interesting to talk about?
We were typically looking at a lot of different things. One of the things is we were looking for properties that have been on the market for a long time. And like maybe anything on the market for over 150 days would say, all right, there's maybe some motivation there. This property was on the market for 417 days when we put it under contract. So they started at 385. When we got to it, they had it listed for 299.5. We offered $277,000 with a 10-day inspection clause. It had 8 residential units and it had a 4-bay garage in the rear.
Okay.
But yeah, the 8 residential units were all rented. Each unit was rented for about $500, which is pretty much below market because of the condition of the property.
All right. So $4,000 a month in total rent. So, all right. So $4,000 a month at $267,000. So like those numbers are pretty good, but it sounds like it needed some rehab and the rents were below market. So there was opportunity there to raise the rent. So is that really what attracted you to this building?
Yeah. We knew that we did a 10-day inspection and we did our due diligence where we pulled the leases and we actually paid, like we don't normally pay a professional inspector to go in, but this was a big building. So we actually paid for a professional inspection so that we'd have it all documented so that we knew what exactly we were getting into. So that was one thing that we don't normally do that we did here.
Okay.
But we also knew that there were some other opportunities in this building to where we could increase the cash flow.
Okay, so you're buying it at 267. Did you use like a short-term hard money loan or some kind of private financing to buy it, or did you get traditional bank financing?
No, we typically buy everything with private money. We borrowed $300,000 in private money at 10%.
Okay, and $300,000, was that so that you would then have some money to fix the property up?
Yeah.
Okay.
Yep.
Okay.
Yep.
So
that's exactly what we do.
Okay. Then with the rehab, how much did you spend to fix the property up?
When we did our due diligence, the owner was paying the electric, which was probably about $500 a month. The owner was paying the oil, which was, I'm guesstimating, we never had to pay it, but $500 a month. The owner was paying the water, which I'm guesstimating was about $150 because that's what we pay now. Then he was paying taxes and insurance and all other maintenance. So he had about $1,150 in just electric, oil, and water. So we knew that based on our rehab, we were going to eliminate a lot of that and transfer that over to the tenants.
Okay.
So our rehab was larger than, I guess, monetarily larger than we thought it was going to be. So we basically reduced that oil bill over time to a gas bill to the tenants, which is actually gas is, a more efficient source of heat than oil. Yeah, we basically fixed them up as they became vacant.
Okay.
So we had a couple to do in the beginning. And as we fixed them up, we raised rents. So we took it from each unit I think originally when we bought it, they were at $500. After the rehab, we took them to around $700. We were around $5,500 and we had, one of the conditions of the sale was the owner was to remove everything out of the attic and the basement and the garages. So as soon as we got those garages cleared out, we rented those to a local contractor. So we were getting like $175, $200 for the garage. So $5,500 after the refinance for all the units, and $175 for the garage.
Okay. All right. So so at the end, you've eliminated the electric and the heating. And then what was your mortgage payment then when you did your refi to your long-term loan?
About $2,400.
$2,400. Okay. And the rents at the time were $5,500. I know rents have increased a lot. Are you getting higher rent today?
Yeah. So what we've done now that everything has been rehabbed, we've slowly pushed the rents up. And in the last, I'd say 6 months, we've converted 2 of the units to short-term Airbnb rentals. So those are one of them's bringing in about $2,200 a month. The other one's bringing in about $2,000. So that's pushed the rent up to about $6,400.
Wow. Okay. So you've got $6,400 in rent, and your mortgage payment is, you said $2,400? Okay. Wow. So you've got $4,000 a month cash flow. Now, how do you deal with budgeting for repairs and vacancy and just other expenses that might come up?
Yeah. So we use a system called Profit First. And if you haven't read that book, or anybody's listening hasn't read it, I would go out and get it. There's actually a new book called Profit First for real estate investors that just came out from a gentleman we know. But we use that formula, and basically what that formula says is every time you get a check in, so maybe you flip something, all your rents come in, you take that check and you break it into several different accounts. And so you'll put it in your profit account first. So that may, whatever, you can look online and see what the numbers are, but you take a percentage out and you put it into profit. You take a percentage out and you put it into taxes. You take a percentage out, you put it into owner compensation. You take a percentage out and you put it into reserves. And depending on what accounts you have or how your business is set up, you pull those out. And then we have to pull probably the majority out into our operating account. And then over time, as you do more, your profit increases, but your reserves increases. And then you're not, waiting around for a big tax bill in April. The taxes are already there. So it's a good way to plan around your business.
Yeah, that's an interesting way to do it. I haven't heard of any other investors doing that. And so you do this with all of your rentals?
We do. Yeah.
Okay.
We do in-house property management. And so as those rents come in, we divvy them up into those profits account. I think the book teaches you to do it like the 1st and the 15th of every month. And I think we pretty much do it the 15th of every month.
In addition to owning rental properties, Bill is also a full-time realtor. If anyone is investing in the Martinsburg, West Virginia area, I would definitely recommend reaching out to Bill. I think he would be a great resource for you. Bill also hosts a monthly meetup group. It's actually a really good group. Bill had me out there with a couple of landlord friends on a panel a few months ago. It was a really good time, really good group. I would definitely recommend checking that out if you are in the area. I've got links to Bill's contact information and also a link to the book that Bill mentioned on the website. You can find it all at rentalincomepodcast.com/episode 351. If Bill inspired you and you're ready to buy your first rental property or you want to add to your portfolio, the lender that I recommend is our sponsor today. It's Chaley Ridge from Ridge Lending Group. Chaley is a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of different loan programs, and she can find something customized to you for your situation. If you want to find out more or you want to set up a time to talk to Chaley, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. If this is your first time here, make sure you either subscribe or follow the show. We put out new interviews every single Tuesday, and if you subscribe, you'll get notified as soon as they come out. My name is Dan Lane, and this has been the Rental Income Podcast.